Hello, Accounting 203 students. This is Professor Hassey. This is our introduction video for week and class number 7 for Thursday evening, July 23rd at 6 o'clock. We'd be talking about a lot of subjects tomorrow night. The first two will be our midterm examination review. The solution file folder is in Blackboard. Please review that and see where you might have gone wrong, but on the whole, the class did excellent. I was very impressed with everybody. Some of us still have a couple of issues to deal with in the accounting cycle, but please, we'll discuss that in our class tomorrow evening. Also, we'll take a look at our project paper, an update on that and the research involved in that, making sure you're all comfortable in getting that going. Then we're going to be talking about 3 chapters. Chapter 10, on how we come up with the depreciation of plan assets. We'll be looking at a problem 10-2A. Chapter 11, looking at current liabilities being exchanged for longer term liabilities like notes payable. Looking at 2 problems there. And then an introduction to corporate accounting. How do we account for corporations? The accounting for common stock, for retained earnings will be our topic. You'll be given a quiz tomorrow evening, quiz number 3 on chapters 8 and 9 from last week, and chapter 10 from tonight. Chapters 11 and 13 will not be part of quiz number 3. So as an introduction to our week's work and plan assets, here's a brief video from our publisher.
Hi, I'm Paul Kimmel. In this chapter, we talk about property, plant, and equipment, otherwise known as PP&E. In industries such as manufacturing, utility companies, and transportation, the investment in PP&E can be enormous. For example, Maersk, a shipping company, at one time purchased 20 of the biggest ships in the world for $185 million apiece. How it accounts for that nearly $4 billion investment matters a lot to its financial numbers. In the case of plant assets, companies have lots of accounting choices. First, they can choose from a variety of methods: straight line, accelerated methods, or units of production. Next, they estimate the asset's useful life. This can vary a lot from company to company. They also have to estimate what the asset will be worth when they're done using it. A company's net income can vary a lot depending upon the accounting choices that it makes. If a company has a lot of property, plant, and equipment, then reading the notes to the financial statements is absolutely critical. For example, I once analyzed a pharmaceutical company that used a useful life that was twice as long as other companies in the same industry. The company was reporting strong profits, but if a more reasonable estimate had been used, they would have been recording losses. When this was finally reported in the financial press, its stock price plummeted. You didn't need to be an accounting expert in order to figure out that their accounting was bad. In fact, this chapter provides you with all of the background you would need to arrive at the same conclusion on your own.
So that's a good introduction to Chapter 10, the recording of depreciation and understanding the salvage value and the length of a plan asset. Very critical, especially needed to know because you'll all be studying this in your business finance class coming up in the future, in your future terms, Business 330. This is a huge part of that class and discussion in finance. So I look forward to seeing you all tomorrow evening. We'll have a wide variety of things to talk about and answer any of your questions or concerns. Thanks, everybody. We'll see you tomorrow evening. Have a good night. Bye-bye.